Hi, my name is Aaron Newton. I'm the Chief Data Officer at Thanx. I'm also a co-founder. I'm joined today by Ha Lee, Head of Marketing at Pokeworks. Ha, tell us a little bit about Pokeworks.
Sure. So Pokeworks is an 80-unit chain of build-your-own poke. In the United States, we've been in business for about 10 years and are in 22 states.
Tell me a little bit about your role. I know that you think about this from a finance perspective a lot as you run at marketing.
Mm-hmm.
So tell me a little bit about the role that you occupy inside of Pokeworks and how you apply yourself to it.
Sure. So officially, I'm head of marketing,
Mm-hmm.
but I come from a finance background and a quantitative analytics background.
Mm-hmm.
So when I think about marketing, it's from a very kind of stakeholder-centric view,
Mm-hmm.
and I'm always evaluating ROI and incrementality.
Mm-hmm.
With that said, loyalty itself is very suitable to look at marketing from an ROI and kind of financial lens.
So you said a stakeholder perspective. So clearly one of those stakeholders you're thinking about is your finance leader. When they're throwing questions at you, what are the questions you think they're really after? What do you think should get ahead of that?
Yeah, I think from their perspective, ultimately, our finance leaders are watching out for the benefit to our franchisees,
Mm-hmm.
which truly are one of our major customers,
Mm-hmm.
and also, of course, the actual owners in the company. What they're really asking about is, okay, well, loyalty itself has an implicit requirement on discounting
Mm-hmm.
for customers and guests. That's one of the major mechanics of loyalty programs today. Second thing is there are software costs,
Mm-hmm.
and then there are payroll and talent expenses.
Mm-hmm.
So all in, are we generating an ROI for the business
Mm-hmm.
and its owners?
Gotcha. When you were first evaluating things with that constituency, what was that conversation like? What did it take for you to align on a decision and move forward?
Yeah, a few things. First and foremost, we did extensive diligence,
Mm-hmm.
not only on the program itself as we've experienced it as consumers
Mm-hmm.
from other brands that were using Thanx. We also took a deep look at the technology,
Mm-hmm.
the tech stack of Thanx, your capabilities, your product features.
Mm-hmm.
But we also spoke in detail with many existing Thanx customers,
Mm-hmm.
really to understand for ourselves what is required to succeed on the Thanx platform,
Mm-hmm.
and whether the approximate success that they've found
Mm-hmm.
turn into actual success that we can forecast in our models.
The question that I think a lot of finance leaders are often asking the marketer is are we paying for visits we would have gotten anyway?
Mm.
And so, how do you answer that question today now that you have a lot more, mature program and all the data that you have?
Yeah, so that's a question for incrementality, right?
Yeah.
Absolutely, there will always be some form of cannibalization
Mm-hmm.
of a loyalty program against in-store traffic, which, by the way, is the intention of a loyalty program. You're building a program that's supposed to benefit your guests.
Yeah.
Okay, that's first and foremost the consumer promise is what it is. The second thing, though, is does it drive repeat visitation?
Mm-hmm.
And from our data, yes, it does. So loyalty members, from what we've seen, and we've seen this actually from older programs as well, is that it does drive repeat visitation.
Mm-hmm.
It drives larger average checks. It drives, it just drives larger LTV, lifetime value.
Yeah.
And so we see that. But what it also does is it provides a platform, a vehicle for communicating with the guest.
Mm-hmm.
So without a loyalty program, and if we break it down to the fundamentals, without a way to capture a guest's contact information through phone number or through email, all the value you produce, all the great things a brand inherently can deliver,
Mm-hmm.
there's no way to deliver that message.
Mm-hmm.
And so, in particular with Thanx, you have a communications channel. You have a way to capture the contact really efficiently and effectively.
Mm-hmm.
And we use those communication channels to deliver news about new product promotions, new product rollouts, special programs, reminding our guests to come back.
Mm-hmm.
And that's very effective.
Mm-hmm. So when most people think about loyalty programs, they do associate it intrinsically with discounting. And how do you think about that tension that CFOs and franchisees feel when they really just look at the I in ROI and they focus exclusively on, well, there's a cost here and I don't like that? How do you help them reorient on the return?
Yeah. So there's two types of returns to pay attention to. One is what is the expected lifetime value at the individual level, right? So, it's pretty easy for us to, strip out what we think are the costs, right? You've got your food costs, your labor costs, your royalties, your ad fund fees. You could strip that out pretty easily and understand how much pass-through profitability there is.
Yeah.
And we know approximately, what type of repeat visitation benefits do we get? You can map out roughly the incrementality of that. But then the other ROI, or let's say the ROI in the program is really keyed off of the product level sales, which you got to really get into because, if we take a look at ROI, it's not, you could take a look at the surface level, and by and large, if you set the program right, you should be able to engineer sales and profitability lift with the actual cost of the products embedded in there and the cost of the program. But what the loyalty program does, structured, again, depending on the structure, you can actually very intelligently, hopefully, engineer it so that your rewards drive visitation using products and options that have dramatically better unit level economics. They just simply have, let's say, lower cost of goods, and they may or may not even have incremental labor involved. It might just be a bottled beverage off of your fridge that involve none of the high labor costs of making an entree.
So you take a very holistic approach to cost then. I see that.
Yeah.
So one is the discount ratio, and you're using that to your advantage of when you use this low cost item to drive incrementality. When you pull up your data, what are the things that you primarily are looking at? Cost ratio is one. What are the other things that you feel like are the most empowering data points that you use? Yeah,
so we don't look at that many data points. I actually think it's counterproductive. So there are a few keystone metrics that we care about.
Yeah.
First and foremost, we look at it in the form of course, like a typical marketing funnel. We want to make sure our top of funnel acquisition of loyalty members is really efficient and growing.
Yeah.
That nothing else downstream matters if you cannot get somebody to join your program.
Yeah.
By and large, that is one of the key metrics for early stage health of the program. And the next thing we look at is repeat visitation and the portion of our revenue from loyalty members that are generating their first purchase, or that have been in the program and generating 3+ purchases. And from our conversation, the vast majority of Pokeworks program revenues comes from high visitation, high repeat customer bases.
Right. You just have described yourself as a marketer who thinks like a finance person. How has Thanx made that easier, or made that combination that you have more powerful?
Yeah. So with Thanx, the reporting within Thanx really breaks down the kind of the mechanics of the program pretty simply, right? It's very clear how fast we're getting new customers, how much of our sales base and revenue base is coming from customers of different segments, and which is very helpful. And you also break down kind of very nicely where our sales are coming from, what rewards are driving certain types of behavior. And with some of your upcoming products, particularly AI-driven query products and BI products, we're able to see more. We're basically able to query it using language that we're familiar with.
So for a marketing leader at some other restaurant brand who has a CFO they're trying to help get over the hump on making decisions, pull the trigger, et cetera, and they're asking that hard ROI question, what would you tell them? Like, what would you say to someone who's trying to evaluate the program today in terms of all the research that you did and the results that you've experienced?
A couple of things. I think the first thing is beyond the user experience, right, the guest experience, that's going to be an enrollee in the program, what they'll see. I think the marketing leaders at other brands can probably have a really productive conversation if they actually collect data through their conversations with other Thanx customers to really benchmark, okay, well, what is the expected range of performance in terms of rewards program member growth, lifetime value, potential reward program structures, such as earn and burn schemes or reward marketplace schemes, and how that changes the dynamics of effective discount rates.
Okay.
Right? If you can break down the funnel and the program structure and how that has delivered a range of different results financially, then each brand can figure out for themselves, well, our food cost looks like this, our labor cost looks like this, our food cost and labor cost looks like this for each of these products that are popular with guests. And they can just do a pro forma of what they can see from the program from where they currently are.
All right. Well, we really appreciate you sitting down with us this morning. Let us know how you feel.
Yeah.
Appreciate it. One of the things that I've heard you talk about is how in so many different ways you use the program as leverage. Like you have an owned media group, like all of your customers are available to you and it costs you $0 to talk to them. And you'll use that leverage of their points balance as a budget to go and try something big. You'll try and shift their behavior, seasonality, in order to draw them deeper into a season when they might normally start stepping away. When you think about all the tools that you have at your disposal, which include running promos on third party, running advertising on social or on search, and then this database that you've built on Thanx, what is it that the database that you've built brings to the table that none of those other things do?
I'd say first and foremost, specific to the Thanx program, is that there's no real cost to communications. It's an email. I mean, Thanx is an email-driven program where email is the communications format, and by and large, the cost of email marketing is really low. And Thanx is effectively also an offer engine, a points ledger for that, and it allows you to rapidly test and use a lot of those insights pretty quickly. But because we're able to create a structure where we define what the unit economics look like.
Oh, yeah.
And we don't have the cost of commissions on a third-party delivery platform sitting on top of that. That does not cap that doesn't cap our return. Just because, when you have commissions involved with every sale, what you're implicitly saying is I accept a maximum of a certain return. With Thanx, we determine what that is. At best, we can drive down our own costs for the rewards we offer, but we get to determine that.